Welcome back to Market on Close. It's time for Options Corner, so we will welcome in Kevin Green, our senior markets correspondent, to catch us up on this Friday. Kevin, what levels are you watching as we head into the close here?
Yeah, well, Marley, obviously we have seen a little bit of a sell-off here today after achieving that record high yesterday. And right now, what we're kind of looking at is the morning levels, that 6450 area that we kind of highlighted has been holding. We've been pretty much consolidating there for the most part all day after that flush to the downside. And what you're hoping for is this is a consolidation, and then we can actually break a little bit higher. We're also holding the 200 period moving average on the 15-minute chart, which is actually fairly key here. And so if we wanted to get a little bit more granular going into the close, once again, 6450 to the downside is really what you want to be able to hold if you're a bull in this market. And then to the upside, 6470. We have just been trading in this 10-point range. And if you're able to break above that 6462 area on the S&P 500, maybe with some conviction when it comes to volume, that probably will give you enough of a catalyst to try to move the market a little bit higher going into the close. But it has been a little bit of a tough day. You have month-end components taking place here as well. And you also have some rebalancing when it comes to small cap and mid cap indexes. So it's been a little bit of a rough end to the month here, but it has been a pretty decent performer overall for the S&P.
And as far as, volatility, I know, we've talked this week about how we've seen sort of upticks in volatility just sort of throughout the day. What have your observations been today on the week, and also how it ties, to the seasonality of August generally being a quieter month as we come into our usually volatile September?
Yeah, it was kind of a mixed session if you're kind of looking at volatility just in general. We did see it obviously move to the upside. It's still not aggressive. We're still sitting at a 15.5 VIX index, which is not really aggressive at all. And right now we are kind of starting off the trend of September maybe being a little bit more of a swing or a challenge when it comes to the equity markets just in general. The other thing too is just market depth was actually a little bit greater here today, and volume on the E-mini S&P 500 has already hit the 100% level for the 50-day moving average. So actually we did have a significant amount of volume for the most part on a day where we're going into a holiday weekend. And volatility from a seasonal standpoint over the next couple of weeks, actually pretty much until the middle of September, traditionally, if you're looking at it on a seasonal basis, should get actually a little bit higher from here. We've been kind of waiting for that over the last 2 weeks, 3 weeks. It just did not come to fruition. We were seeing a divergence where our volatility this year was actually continuing to move lower, where traditionally we actually do see it move a little bit higher towards the middle of August. So we're sitting okay for right now. Once again, we're having a little bit of a rotation, and there's a lot on the calendar in September that could create some volatility as well. Not only the FOMC, which we're going to talk about ad nauseum here over the next couple of weeks, but you have options expiration for the September quarterly expirations taking place. Also some rebalancing at the end of the month with the JP Morgan collar. So some things on the radar just mechanically that could create a little bit of turbulence here for the markets.
As I'm just taking a look at, some of the sectors and some of the moves in the companies that we talk, pretty regularly about, a lot of the semis down on the day.
Yeah, so semiconductors getting hit. I think it's not only just the result of the NVIDIA earnings. It's not so much that the earnings were bad. It's just the fact that we have that implied volatility getting taken out of the market right now. And so you have maybe a little bit more of a restructuring in trades. The Marvell earnings also did not help the sector. But if you're looking at the SOX or the Philly Semiconductor Index, it's this 3-year weekly chart. And I tried to put this on a daily, but the 3-year weekly is actually a little bit more interesting. So on a daily chart, if you go back, you could actually look at, we're basically setting up a head and shoulders pattern with the neckline pretty much around maybe 150 points away from where we are currently at. So you don't really want to break that neckline because that is also kind of a little bit more of a bearish sign here. We do have this bearish divergence on the RSI that kind of is taking a little bit of a hold here. And then the MACD, I think, is the biggest risk that we have, Marley. We actually now have that MACD curling to the downside. And if you go back over the last 3 years, and this is a weekly chart, we don't really see that MACD curling and then kind of straighten itself out and continuing to move higher. It usually does continue the trend that it has in the near term, which then also kind of coincides with pullbacks in the semiconductor space, which makes it harder potentially for the S&P 500 if that does happen over the next week or 2 weeks.
Yeah, and you did mention Marvell there as well. They're the top loser on the day, down almost 19% on the heels of their earnings. Kevin, thanks for breaking all of that down for us as we head into the Labor Day holiday.